Hi, welcome to 60 Seconds with Cindi. I'm Cindi Hagley, and I'll tell you in advance, this is most likely going to be more than 60 seconds today. Why? Yesterday, the Fed raised the interest rates 75 basis points. That's the same as 0.75% increase. And already, long-term rates have increased. Now, this is very unusual, and here's why. The markets had already anticipated this rate increase, so it had been priced in already on mortgage rates. The Fed only controls short-term rates, not 30-year fixed rates like you would find with a mortgage. And long-term rates do not always move in unison with the short-term rates like the Fed rates. So the markets often perceive sharp increases in the Fed rates as inflation fighting efforts, and sometimes they're perceived as threats to economic growth, and that often causes rates to fall. Rates increased so much after the announcement because of the comments that the Feds made when announcing this increase. What they said was they plan to continue on an aggressive path to increase rates in order to fend off inflation, saying they will increase rates by an additional 1.25% this year alone. And that's 1% more than previously expected. So the bond markets took this as an admission that the Feds have no idea how to handle inflation, because let's face it, nothing scares bond buyers more than inflation. Is the Fed being too aggressive on this front? Consider this. The data that the Feds look at is always behind the times, and they seem right now to be oblivious to how soft the economy really is. And keep in mind that the Feds lack real world experience, and they're wrong a lot. In fact, they're wrong most of the time. And financial pundits have too much at stake. These are the guys that have been saying, oh, rates are going to fall, it's not going to be that bad, blah, blah, blah. They have too much at stake, like money and reputation, to be wrong. And keep in mind, these guys live in the real world. So what's going on now? Nobody predicted this. Even scarier, the Fed is losing credibility, not that they have any left, and they're planning on sticking with these decisions until inflation decreases. But what did they know about inflation? Again, they're not looking at real world numbers. They're looking at stats from several months back. How is this going to affect home prices? Now, some folks are saying that the rate increases will have no effect on mortgage rates. And even I said that. I've been saying that for the last several weeks, but now I'm not so sure. Rates for a 30-year fixed right now are slightly above 6%. And granted, that's still dramatically less than past decades, but we're double what we were a year ago. So what's going on with all this? The Fed's goal is to bring down stability by discouraging consumer spending, and they do that by making money more expensive to borrow. So consumers' budgets are being stretched thinner and thinner, but we have not stopped spending. So this doesn't seem to be working. You also hear a lot of folks, including me this last week, say that this rate hike has already been factored into mortgage rates, and it has. But guess what? The Feds are already talking about more rate hikes this year, and that means even higher interest rates. So let's get to the bottom line. Sellers, what does this mean to you? First of all, there may be fewer interested buyers. Higher rates mean more people could be priced out of the current market, and that is why who you work with matters. You need to go with a real estate broker that is not only experienced, but you need someone who is following these trends and will be able to advise you on how to price your home accordingly. Will home prices fall? We still have low inventory here in the Bay Area, so any decrease in value should be minute. But if you're trying to time the market to maximize the value of your home, sell it now while you still have more qualified buyers competing. I've sold in this type of economy before. I know how to price, I know how to market, and ultimately, I know how to sell your home. Remember, who you work with matters. And buyers, how does this affect you? You're most likely going to end up qualifying for a lower loan amount. And yes, you will be paying a higher interest rate. But if you can hold on for just a year or two, you should be able to refi at a lower rate. Now, I know this is a lot to unpack for a Thursday, but for fact's sake, if you're buying or selling a home, you need me. Pick up the phone and call me, 925-867-4663. Who you work with matters. I'm Cindi Hagley, and I get things done.
If you were thinking about buying or selling, call Cindi Hagley for an interview. You are likely to be impressed.